It's going to be kind of a weekly scan. What happened over the weekend, what I envision going forward. So obviously we have the small gap down. It was a little bit more aggressive after hours and was subsequently bid up. But the way that this is developing all kind of aligns with my thought process, right? So originally when we see a 10% decline from the Q1 highs and we see the VIX elevation to 30, and we see this kind of peak fear in the equity markets and in the greater public being very fearful and bearish, and it is happening into March. Buybacks on the 31st, and there's preliminary signs of accumulation, and it's happening into the April flows, right? We're gonna see mitigation, right? We're gonna see a little bit of a reversion. That's just how the equity markets move. Now, the 10-12% rally we get to new highs is not very easy to tell that that's going to happen. It's highly unlikely that you could catch this move with a very clean risk to reward and a very clean amount of leverage. I don't think that anybody can really call it. They said this is going to happen because it's very unlikely that this happened the way it did. But the behavior in which it emits as we rally to new highs is that of a very parabolic distributive top being put in. So you have essentially these exhaustive gap ups with a lack of like digestion. So we're getting this result, and we're not seeing the most notable amount of effort. We've had some of the lowest volume days we've seen the entire year put in on this rally, and it happens in a way that we don't see digestion, we don't see a higher low, we don't see harmonic patterns develop, and that is really because it's fueled by late buyers and flows, right? And we even see a dark pool being put in at 670, which just happens to be discount, happens to be a sweep of the ceasefire gap. And we see this all develop in a way where we see a rally, we see this late call buying, we see the dealers now short delta buying back stock to hedge themselves to be neutral. And then we see the expiration occur. We're going to see these late buyers get trapped, start selling. It's going to exacerbate the move down. These dealers are now selling stock, and it's going to really start bleeding aggressively, in my opinion. And more than likely, we'll see a nice VIX pop as well. I don't think like a full-on vol event like April. We didn't see that, and I didn't expect that to happen the way that this developed. But I do expect a bleed to develop really, really notably down to this 670 spot into May. This is kind of the way I imagine this happens. We bleed down to this gap, potentially the full fill. We see a pop, maybe to 690, 696 into the May apex, and then we can see a subsequent bleed back down to like the Q1 2025 highs. I think the June exposure and May exposure are optimal for 670, 660, and then 630. This is very clean, and I do want to buy some options, but I am going to go with the short on a leveraged ETF for SOXS because I still think you can get a 40% return in May. But then we look at a name like, QQQ. It's the same exact thing. This parabolic rally, these exhaustive gaps, closing at the highs, small spreads. We have a gap to fill, and this should see the 600 spot, in my opinion. I do think that, that's going to happen. And I think that when we look at how this is developing, if we lose this 637 spot, we lose this 697 spot, that's going to be a big time, that's kind of a potential like risk to reward to be put in there, right? It's like, okay, we get a lower high put in off of this 696 spot, we slip through, or reclaim of that can be your risk for a short to 670. There's no need to really rush into this. And I do notice that the market tends not to bottom or top on a Friday. That's why I'd be a little speculative at positioning aggressively currently. But if you want to wait, you can just wait for the slippage beneath 696. It's still a 25-point move, right? It's still a 4% move on the equity. I think that this short is really optimal. I think that there's a longer term position and a shorter term trade here. We look at XLF. I mean, I've talked about this distribution that's been developing since Q2 of 2024. We have continued to see this develop into December kind of potential UTAD or January UTAD, and then we see this decline very easy, very effortless, and we see this weak rally backed by like no effort. When I mean effortless by this, I mean it just bleeds. There's not really a substantial bid that sees any fall through off an attempt to mark this up here until we get the subsequent reversion right into the gap fill from the 27th, right into the discount. We see the preliminary signs of a distribution on like an hourly perspective. We see a really exhaustive candle on this 2.65% gap up, bid this gap, fall through is weak, right into the discount. This is an optimal short. This is the one short that I kind of wish I could take. I should take it for a trade to $50. I mean, this is just beautiful. And we have a lot of the individual financial names looking gross as well. However, I am in some SOXS. I bought it, high days on Friday. I think we can easily push 10 to 15% on SMH/SOXX. They're relatively similar in terms of the behavior. But this is very distributive as well, right? And it is remarkable how long-term these distributions can potentially be. We have the preliminary signs back here, and we never really reaccumulate this, right? We just continue to, we mark down into the gap, we get this parabolic rally. We're going to bleed into this gap, in my opinion, and this is very distributive with how the behavior of this is developing. Same with XLK, right? And then we go ahead, this is what's really notable to me. We look at XLE. We're finding some higher lows on individual names in XLE at some pivotal points. Oxy, this previous gap from 2024 that was broken down under, used as resistance. We now broke back above it. Now it's being established as a support on a name that, in my opinion, $80 is not so far-fetched off this 618 bid in April, right? And I talked about that a lot. And look at where we're kind of seeing a bidder establish himself, right? Same with XLE. But XLP and XLV are my most notable names. I mean, we see the reaccumulation here after the rally in 2023 to 2024. We see the reaccumulation, the spring in November, the higher low in January of 2026, right? We get this rally to new highs. We're now seeing the digestion, very consolidated, condensed range here in the discount with nice signs of a buyer. You look at a name like PEP, that 158 range is the line in the sand, in my opinion. KO as well is very, very appealing at this range. Then we look at XLV, virtually the same thing, right? We have this accumulative sequence developing down here off the April lows. We find our kind of change of character. We rally to new highs. We have like a daily distribution, a markdown that's just finding a buyer within the discount, right? And we have a couple individual names that I really do like as far as healthcare goes. Bitcoin looks hideous. I mean, it looks very, very similar. Very, very similar to what we had off the November bid. But there's just not like, when you think about the market, when you think about accumulations, when we think about, distributions and accumulations, right? You want to see a campaign be established. You want to see lows be developed, taken out. You want to see hands changed, inventory collected. And you don't want to see a bid, a reversal, highs being dumped off, the buying being relatively weak, this, happening in a distributive way, and then a subsequent markdown, and then the same thing, right? We never take out these lows. We just redistribute back into this range. And I think the same thing is happening again on Bitcoin. I do think we're going to see lower on Bitcoin personally. That's kind of a red flag. We look at a lot of individual names. I mean, Google was not looking that good up here. Amazon, not looking that good up here. I've talked about how that's potentially a longer-term distribution. Tesla earnings report. I got a buddy who's trading Tesla right now. Weekly options. Why is he trading weekly options on Tesla with the report after we get like a 20% move? I mean, this was when you want to buy Tesla. Why would you not bid some options here? I don't know. That's beyond the point. Tesla reversal into the report. Pretty interested to see how that goes. I said ARKK summer could be loading. Some nice volume last week. If there's not really a market-wide breakdown, I would pay attention to ARKK to $100. Nvidia looks hideous. Some shorts here trading to 153 would be there. We faded this gap in after hours off the report in February, but there's not a lot of liquidity that's within that trading session. So it's a reasonable thing to see it revert back to this range in a very disgusting fashion. Apple doesn't look good. Meta does not look that good. This is not a clean behavior in terms of a reversion, in my opinion. And then Microsoft. I mean, I long this for about, I bid this run here to here, 17%. I had MSFU. I traded the full position for about 30% return. But then we're getting these exhaustive gap ups into where the accumulation started, a progression gap. You know, this could revert a little bit more on the report. I did what I wanted to on the reversion for that. AMD UTAD being established currently as well. LLY looks crisp, right? We have the 2-time inside week with a nice closer last week. We see, you know, if we pull up the after-hour session, we're finding a higher low and discount. I didn't even notice this pop after hours, right? We still like a 5% pop after hours on Friday, the 17th. Very healthy behavior on LLY, in my opinion. SOXX, I'm short via SOXS. I do think that we can see a 13% decline from the highs here, maybe 16, and that's going to be within the next 2 weeks, right? So I'm gonna try to trade this. I could buy options, but I don't really feel like the stress is worth it. This is hideous. I mean, this happened into the report, or else this would have been really tradable. Disgusting on Schwab. Hertz was very clean. That's a speculative commons position you could take off that kind of higher low off the sweep of this candle. I don't know, IGV, I wouldn't mind a gap up off the Microsoft report to kind of finalize this reversion into discount. It's just how these things happen, right? We mark down, we see, you know, the tape kind of flip. We see a lot of the late sellers get trapped, the buyers bid that up, and then we rally, and then it's just a cycle, a tale as old as time, right? Where now people are buying into it. Now we're going to see this kind of offloading of inventory off of an earnings report. But yeah, I mean, that's really it. You know, I love USO to trade a little bit lower. I mean, look at this chart and tell me it doesn't have a lot more left in the tank, right? We saw the capitulation in April of 2020, March of 2020. We saw the subsequent reversion, hundreds of percent. We saw the 3 years of consolidation, and then we get this expansion happening off of the Venezuelan news kind of catalyzed it, and then the Iran news kind of catalyzed the expansion, and then the subsequent changing of hands on the late buyers. But we're seeing very healthy behavior. I would love to see 92 on this, and then I think this honestly trades higher, as speculative as that is. Same thing, you look at like U.S. oil, it's the same thing. Look at Oxy, it's the same thing. The behavior of these names, they've been resting and digesting after a historic move off COVID lows and 2022 highs for 3 years now. Obviously, some more than others, but it's not a surprise that we see a little bit higher on those. So other than that, there's really not much that I have to say. I'm long LLY. I think that from right here, I think we get a nice move on it this week, another 20%. I'm hoping to get about 40% on ELIL total. I think I'm like down like 6% right now, and I'm hoping to get 30 to 40 on SOXS, and then reevaluate, right? So that's pretty much it. I mean, dude, this is a short, right? Like the risk reward is asymmetric. It's all lining up. It's all developing. If you're buying up here, you're a fucking idiot. I'm sorry. Yeah, pretty much it.